Yeah, I can.
Okay. Okay. Let's start your analysis. Now, what currency you want to try, you want to start?
Maybe let's try AUD USD.
Okay. So tell me what you plan to do first, step by step. Make it very mechanical.
Okay.
Ah.
So the first thing is you need to go to the highest time frame.
Uh-huh.
So that would be 1 month.
Okay. So what do you do on this higher time frame, like monthly?
Identify the trend.
Okay.
The most recent trend is
Okay. One thing is you see the market do not have any concept. They don't understand the concept of time, right? Market don't have the time concept, right? So so even though we say we go to monthly, weekly, daily, but the market don't really care. They don't understand what is time. You understand what I'm saying, right? So when we look at a chart, even though this is a monthly time frame, but sometimes within this monthly time frame, we are able to see there are different kind of how should I put it? Um, different time trend, not necessarily monthly, but you take away, forget about the time. You just go along what you see. Say, okay, on this particular time frame, example, I call this time frame 1 or time frame A. This is the trend, right? So because we do not want to restrict ourselves to work within the kind of time frame, the kind of framework, because the market don't understand time. Okay.
Yeah.
Okay. So what is the higher time frame trend now?
So it starts in a downtrend.
Yeah.
And then it becomes more bullish.
Mm-hmm.
And then eventually becomes more bearish again.
Yeah. So what's the trend on this time frame? We don't care about time. We don't care whether this is a monthly, 1 month, 2 month, 3 month, or weekly. Okay. When you're looking at this chart right now, what is the trend? Working from the left to right.
It's moving down. So
no, working from the left to right. Okay. Can I show you one time?
Yeah.
Okay. Let me have the control. Yeah. Okay. Let me have the control. Okay. Now, I work from the left to right. I can see that I have a high, I have a swing high here, I have a swing low here. Okay, let me have a notation. I have a swing high here, I have a swing low here, I have another swing high over there, right? So then I find where is my between these three swing point. I can clearly see that my where's my point? I can't see the it's here. The highest high is this one. The lowest low is this one. Am I right?
Yeah.
Okay. So I know that anything that is within belongs to the smaller time frame. The biggest time frame here is this one. Wait. This one and this one. So anything here, I don't really care. All this belongs to the smaller time frame. So what I care is between this low and this swing high, what is the trend, right? So I can clearly see that, well, between here, I can see that I have a swing high here, then I have a swing low, then the market go up, all right, it pull back and eventually go up. So the most recent break of structure is this one. Can I say that?
Yeah.
The most recent break of structure is this. Okay. So if the most recent break of structure in this time frame is up, so I can say that, well, it is bullish. And right now, what I see, whatever I see here, the price after make a high, the price start pulling back. This is simply a retracement. Means that I'm having something like this right now. I have a high, I have a low. So now whatever happened here belongs to a smaller time frame, is actually a retracement. Potentially the market is going up again because the break of structure is towards the upside. Can you see this? Can you follow until now?
Yeah.
Right. So I can safely say that, well, this higher time frame, it is in an uptrend, right? And the high is here, the low is here. And I can also say that the target is going to be here, right? This is going to be the target, right?
Mhm.
Because if the price start going up, follow the trend, then this will be the target. Are we okay so far?
Yeah.
Okay, then I don't even have to go down to weekly yet. I can just continue based on here. Okay, well, from here on I can see after market make a high. After market make a high, I can see the market start to making a lower low right now, right? So here, where is the break of structure? Well, the break of structure is here. Sorry, the break of structure should be a higher low. Where is the higher low? This is not a higher low. Is this a higher low?
No.
Why that's not a higher low?
Because there's another one down here.
No. Because that one is not a higher low, because this high, the price here did not make a high higher than this high. So it's like this, right? So a high, a low, higher high, and then price pull back, make a low. So when the price make a high, and this high is higher than the previous high, then we say that this is a higher low. All right. Now,
Okay.
if the price go up and it swing back and it make a low, and it did not make a high higher than this high, and then it make a lower high, then this cannot be considered a higher low. It's not valid, right? So where's the next higher low? The higher low is this one, because this one make a high. Okay, correct. That's the one. So let's clear all the drawing first. Then you can continue. Click the clear. Click the clear. Click the clear. See that there's the dustbin there. Clear. No. Here.
Yeah.
Huh?
So because we've identified that this is now in a downtrend.
Mm-hmm. So this is in a different time frame already. In a slightly lower than the previous time frame. Now we are in a downtrend, right?
Yeah.
Okay. Now then identify where is the most recent break of structure. Most recent break of structure. Most recent.
Oh.
Where's the current price? The low, right? Sorry, I mean not the current price. The low, the last swing low, the last lower low. That one, right? So where is the most current break of structure before the market break the low? This one. This one. Can you see? This one.
Oh, okay.
Yeah, because this is the latest, right? After, of course, just now you're pointing this one, which is right. This is correct also, but this is not so. This is not the most recent. The most recent is this one.
Okay.
Okay, follow? Yeah.
Yeah.
So this is not the most recent. This is the second most recent. Okay, let's continue. So what do you see on this time frame? Is it in the downtrend with a break of structure? All right. So where is the target? Did we close below that low, the break of structure?
No.
No. So what does that mean? What does that mean?
That means that it's starting to probably go in an uptrend.
Not yet going uptrend. It looks like price is refused to go lower, right? We have a break of structure, and we can see the price make a low lower than this low over here, and lower than all this low. So this movement down, when I draw this, I'm not sure whether can you see or not. Let me know whether you can see what I draw. From here, the market moved down. Can you see? Okay. Yeah. The bank, the institution, big order trader push the price lower to make this low. Why they want to do that? Why are they moving the price lower? Why?
Stop hunting.
Exactly. They want to stop hunting all these, stop that power below this swing low, right? Okay. Why they want to do stop hunting?
To move the market in the opposite direction.
Exactly. They want to move the price in the opposite direction. So even though we know that it is in the downtrend in this time frame, but it appears that the market is actually refusing to make a low, and actually the market is actually doing stop hunting, right? And looks to me that the market want to move higher. Okay, so even though it is a downtrend, but we have a bullish bias. You understand now?
Yeah.
Okay, then continue.
So from there, you also need to identify the highest high here,
Mm-hmm.
and then you can move on to the lower time frame.
Okay. But can you remember all this while you are doing while you are doing multiple time frame analysis? Can you remember what you are doing now as you go to different time frame? Huh?
Yeah.
You can. You must write down somewhere.
Yeah.
Whether it's journal or you can write down on the screen. Example, you say, okay, monthly it is just now. Monthly is what? Uptrend or downtrend? Uptrend.
Going to go in an uptrend, yeah.
Okay, something like that. Uptrend, right? Now weekly, even though it's not exactly weekly, but we can just say weekly. Weekly it is downtrend, but stop hunting. So that price want to move up. Okay, so you write something like that.
Yeah.
When you do your analysis, and this one can stay in your on your chart without the, if you sometimes if disturbing you, you just click. You can see here the mouse I here. You just click once, it disappear. It hide. It not this way. It just hide. If you click one more time, it reappear again. So whatever you make your analysis, you will stay there. You will not go away. So every time when you look at the chart again, few days later, you do not have to start all over again. You understand what I mean?
Yeah. Okay.
Okay, continue. So now go to the lower time frame. Just now was monthly, right? So now you go to weekly.
Okay.
Go to weekly first. Okay, what do you see on weekly?
I think I should zoom out maybe a bit first.
Okay, put your mouse on the right and the double click. Yeah, then you're back to origin. And then you pull, correct.
Okay.
Okay, what do you see on weekly?
From weekly.
It's almost the same as what we see just now, right? Huh? Price make a stop hunting and then go up, right?
Yeah.
Very good. So if it's almost the same, then we know that there's nothing we need to. If you think that there's nothing you need to talk about this, then it's okay. Then you can move on to the next time frame.
Okay.
Okay, what's the daily doing?
It's going in an uptrend, but
okay, you want to make it zoom in, and let me show you. Okay, you just pull this on, then just
okay.
is it better?
Yeah.
Okay, continue. So what do you see on the daily?
It looks like it was going in an uptrend, but now it might be accumulating.
Okay, very good. Consolidating. We are not sure whether it's accumulating, because when you see accumulations, because when we see a market go sideways, we call that consolidations. Consolidation, right? Now, consolidation phase, it can divide into two types. One is accumulations and one is distributions. Now, we will see, when we see the market doing accumulation, what it meant is the bank, the institution are accumulating, they are buying their position and waiting to move the price higher. That is accumulations, right? So when we see that the market is doing accumulation, we can safely say that, well, the directions of this market is likely to go up if we see the market doing accumulations. But if we see the market doing distributing, means after price go up for and then price start to distribute.
Yeah.
And market start to distribute. So we can say that, well, the market is consolidating, is distributing. It means that the market, the trader plan to bring the price downwards, right? So able to identify distributing or accumulation is very important because it basically tells us what is the likely direction the market is likely to go to next. Okay. Now continue.
So from here, I think I should identify.
Okay, first of all, you need to, okay, what is the trend? What is the bias in this trend, in this time frame? Bullish or bearish or neutral?
It starts off quite bullish.
Okay.
Becomes slightly more neutral.
Okay, so remember one thing now. The market can only be this, like this, uptrend. Okay. Now, or downtrend. Market can be uptrend, downtrend, or consolidation, right? Only three types. Now, when the market is in, like example, right now, yeah, so many things. Okay, erase this. Okay, remove this, remove this. Okay, when the market is doing uptrend right now like this, now, what we see right now, market is doing this, right?
Yeah.
Now, it doesn't mean the market is bearish. There is still a bias. Even though the market right now, we see, oh, it has been an uptrend, and now we see the price is actually doing like moving sideways. But what is the bias? Even though it is sideways market, what is the bias? The bias is
Bullish.
bullish, exactly. Why the bias is bullish? Why the bias is bullish? Because there is a break of structure to the upside. You see, this is the high. This is the high. This is the high. This is the higher low. This is the higher low, right? So we say that when the market is in the uptrend, you tend to have this kind of pattern, right? After price can go sideways, and then after that, price can continue again, right? So this is it can potentially like do this, or it can potentially do the other way, which is it go up like this, uptrend, then go sideways, then market breakdown, go reverse. Okay, so we do not know, but what we can see until now, we can see that market is the latest, the most recent break of structure is this one. And this one is making a high. So it basically tells us that market want to go higher. But right now it is consolidating. Can you follow so far? It is consolidating. We are not sure whether this consolidation is going to bring the price higher or lower. We do not know yet until we go investigate further. Okay, so now you go and do the same thing, mark the break of structure, and then the high, the range, the high and the low, the origin that break the structure, etc.
Okay. That's a break of structure.
Okay, this is where I think I did not explain to you yet. Now, when we see the market is moving in a consolidations, when the market is consolidating like this, right, you tend to see a lot of stop hunting. Did I tell you before?
Yeah.
So when the market is consolidating, the price has the bank try to take out the stop loss of the trader. So we see a lot of consolidations. So and during this kind of stop hunting, example, we might have a swing high like this. Example, this one swing high and price pull back. Price make a higher high. So it looks to us like this is a break of structure, but you see what happened to the price? The price pull back immediately. So this is not a break of structure. This is actually a stop hunting. Can you see the difference now?
Yeah.
Okay. So when we see the price is actually trading in the sideways consolidations, you got to be very, very careful that this kind of break of structure is not break of structure. This is actually a stop hunting. You have to differentiate between the two, right? So the real stop hunting is actually here.
Okay.
All right. Okay, continue.
So the real break of structure should be here.
Uh-huh. And where's the origin that break the structure, and where is the range? Where is the origin that break the structure? The origin is basically the low that break the structure. No, it cannot be that point. No, why it cannot be the point? Let me explain to you. Let me have the cursor, yeah?
Yeah.
Okay. Now, why I say it cannot be? Because if you take a look, the high is here, and the break is here. So how can your origin come from here? The origin must come from here, isn't it? The source. And price start to move higher and break. If you pick here, the origin come from here. This is to break what? Nothing. Can you see what I mean here? Okay, so this is the origin. This is the origin that break the structure. Okay, so this is the origin, not this one.
Okay.
Yeah. Okay, you draw again.
So now I should identify the range. That's the lowest.
Okay, the other line that is wrong, can you just erase off? Otherwise, you confuse you later.
Okay.
The other line, you must do housekeeping when you do this, yeah.
Okay.
Otherwise, you confuse. You keep everything. Okay, now draw again. Okay, that's a break of structure. Okay, that's the origin. Okay, very good. Then where is the high? No, the high is the highest high. Correct. That's the high. Okay, correct. So now, okay, stop until here. Now, where is there a trap order? Where is your demand? Where is your trap order? Okay, there's a demand. Where's the trap order?
Around here.
Huh? You see, right now we can see the price is I'm not sure whether you're just someone say the weekly is an uptrend or downtrend. I forget.
Weekly was I
How
think
about down?
uptrend because
Uptrend. Okay. We want to when we are looking for trade, we want to follow the higher time frame trend. Okay. So if the higher time frame is up, our buyers is usually go looking to buy. Okay. So now if you look for, if I'm looking to buy, you can see clearly that this daily also look in uptrend, right? Clearly also uptrend, weekly also uptrend, monthly also uptrend. So basically you are more likely to look for buy rather than sell. So if I'm looking to buy, I want to find out where are all my potential area that I want to buy. The first area I'm looking to buy is this demand, right? This ERC up. So this is the potential demand I'll be looking at. Now, the other thing I'm looking at is trap order. Well, I can see this is a high, this is a low. Now, before this price move up, before the price move up from, this is a low here, before the price move up here, right? Where is the trap order? The trap order is here. The bank sell, it take out all this stop loss, right? It take out all this stop loss, trigger all this stop loss, stop hunting, then in buy, right? So this is a trap order, and this is a demand. Can you see? Now, so the demand and the trap order, when we combine these two, right? This is an area that will be looking for future. It's a future our point of interest where we plan to look for a trade there when the price come here, which is the trap order and the demand here. So in other words, in future, if I'm looking to buy, I'm going to wait for buy when the price come to this area. You follow me so far?
Okay.
Okay, yeah. Okay, now, okay, then continue again. And also remember, you want to mark the trap order, right? Because because if you don't mark the trap order where you are which is your point of interest. Now, point of interest it means that in future, when the price come into that zone, that is the zone that you are interested to look for a trade. So you mark off your zone. So when you go to a different time frame, you will always, the background of the color is always stay there, so that you will know that is your point of interest. Okay.
Okay.
Yeah.
So based on the 1 hour time frame, the market still seems to be trading in a range or
Okay.
consolidating,
Yeah.
but the buyers seem to be quite bullish.
How do you know it's bullish?
Because right before that, it's an uptrend.
Okay. Okay. Good. Yeah. So now try to identify this ranging market. Is this a accumulations or it is a distribution? Because if this is an accumulation, we expect price to push up higher. If it is a distributions, then we expect price to push down lower. Okay, so now whenever you see the price in the consolidations, you need to identify, is this accumulation or is this a distribution? Able to identify these two will tells you where the future direction is going to.
Okay. The market looks like it's stopped hunting now, which probably means that
It is stop hunting the you see now. Let me give you a common term to describe, right? Let me have the mouse.
yeah.
So now okay, if let's say I have that like this, right? Price go sideways like this, and now if I am bullish and I want to put a buy order here. I'm bullish, so I put a buy order there, waiting for price to come down, take my order. My stop loss is going to be below the swing low, right? Because I expect the price go higher.
Yeah.
So my stop loss is going to be so it below the swing, all this swing low. So just like over here, if I'm bullish, I expect price go up higher, and I buy, let's say over here, my stop loss is definitely below all this swing low. Okay. So now, if I buy, if my order is a buy order, my stop loss is going to be a sell order. Correct? Correct. Huh? So now let's create a common term, right? Now, when we say bank institutions are doing stop hunting, there are two types of stop hunting. Now, the stop hunting, the sell side liquidity, because why I call this sell side? Because below the swing low are all the sell order. Okay. Now, above this swing high, above the swing high, above the swing high, these are all the stop loss also. All right. Now, and if this is a swing high, it means that there are many traders who actually put a sell limit here and put the stop loss above the swing high. They put their sell limit here, put their stop loss above the swing high. Put a sell limit here, stop loss above the swing high. So if they sell here, it means that they expect price to move lower. Correct? Okay. Now, if they sell here, that means their stop loss is a what? It's a buy order, correct? Correct, huh? So we say that the stop loss locate above the swing high. These are buy side liquidity. Do you understand? Buy side liquidity. Why we call it buy side? Because these are all the buy order. These are all the sell order. And we also know that stop loss is equivalent to liquidity. Stop loss means liquidity. All right. So when we say that the bank are doing stop hunting, we want to know, be specific. The bank are doing stop hunting on the sell side liquidity or on the buy side liquidity. Which one?
Buy side.
Okay, you can just draw it. Okay. So those are all the buy side liquidity, right? Okay, good. So we have the price that move up to do a stop hunt. the buy side liquidity, and then the price move the opposite side. So this kind of pattern, consolidation pattern, is more suitable to call it distributing or accumulating. This is more likely to be a distributing or accumulation.
I think accumulation.
Huh? Distributing. Okay, let me explain to you. Do you know why the bank want to do stop hunting? Do you know why the bank want to do stop hunting?
To move it in the direction that they want.
But why? They can just move. Why they need to stop out other people before they move to the direction they wanted?
So later on, they don't need to absorb all
exactly that is the answer, right? So that they do not have to absorb all their buy order in future, right? Can you do you want to try to explain what do you mean by that in your own words, so that you can remember? Okay, let me guide you, right?
Okay.
Why the bank want to move the price up? To stop hunting all these stop loss buy side liquidity. Why?
So it's easier to reach your target.
Okay. Okay, let me try it. Okay, yeah. Now you see that if you have if there are seller here, yeah, if there are seller over there, before this price move down, if there are seller there, right, that means that they will put their stop loss above, okay, and they'll take the profit, maybe somewhere here, take profit at different level. They want to take profit. Okay, so if they sell over here and their buyers is down, that means their taking profit order is actually a buy order. Correct? It's a buy order. Okay. Now, if the bank has the same buyers that they want to move the price lower, but usually the bank institution, their target is usually much bigger compared to the retail trader. So that means that when the banks start to move the price lower, and when they reach all these area where these sellers start to take profit, these are buy order, right? You will come up here, then that means that this buy order will block the price from continue to go lower, unless the bank willing to absorb all these buy order. Okay, but in order to absorb all these buy order, the bank need to come out with a lot of capital. If they are lack of capital, this bank can go bankrupt, right? So this is a very inefficient way to move the market, to move the price. Okay, so the best way to move the price, if the bank already have a bias to move the price lower, the best way to move the price lower without much resistance is to get rid of all these sellers who already sold, and who place their take profit at the lower here. So if they are able to get rid of all these sellers, that means there's no more buy order at the low here. Am I right? So in the future, when the banks start to move the price down, they won't face any resistance to absorb all these buy order. So that is the reason why the bank want to take out the early seller and do the stop hunting.
Okay, so basically minimizes strain on their capital.
Exactly. So because once we know that, then everything makes sense, right? So it means that when we see the price move up, basically they are hunting for this stop here. Once they hunt the stop there, the price move down. So we continue to see this price move up again. It make a high, price move higher. So stop hunting here again. Then price pull back, price make a high, price move higher again, stop hunting again. So you can see that consistently, the bank are clearing the obstacle on the buy side liquidity. But on the sell side liquidity, you see what happened? All these are respected respected. The attack is more on the buy side rather than the sell side liquidity. And therefore, we can safely say that this is likely to be a distributing, right? The bank are distribution, right? So if the bank are distributing right now, it means that the future market direction is likely to go down.
Yeah.
Okay, make sense?
Yeah.
Now, just like over here, right? You can see the price come down, make a, you see the price over here, price come down, it make a low, then price make a lower low, stop hunting. Price make another lower low, stop hunting again. Then it pull back. Then price come out, make another lower low, clear everything. Can you see now? Then price pull back, right? There's a low, there's a low, there's a low, there's a low, and price dip down again, clear all this low. Then dip down again, clear all this low. Then it move up. So in this case, you can see that all the buy side liquidity are respected, but the sell side liquidity are being attacked. So in this kind of scenario, we know that this is likely to be accumulations. So if this is accumulations, we know that the future market direction is moving up, and which it is going up. Can you see now?
Mm-hmm.
So it is very, very important for us to identify, is the market doing distributing or accumulating? All right. So now continue.
Okay. So because it's distribution, that means the market is likely to move downwards after this.
Mm-hmm. Okay, let me we have to start from a bit to the left side.
Okay.
Because if you go to your daily or 4-hour time frame, you can see that the consolidation start from where? Can you go to the daily? Okay. Now, can you just mark make a box on those where the consolidation starts, so that you must tell a story, right? You cannot just halfway come in and then because just now what you show is only towards the right side of the trading activities, but you can't do that. You must start from the left and tell a story. When not all the way to the left, the part where the consolidation start. Yeah, the part.
Okay.
Where does it start?
Mm.
Okay, let me have the mouse. Let me show you. Let me have the control.
Sure.
Okay, let me okay. So basically like this. So what I'm interested right now is the whole entire area. This area I'm interested.
Yeah.
Okay. So once I highlight this, now I can go to my 1 hour time frame, and I know exactly where I should start from to do my analysis. I start from, I go all the way to the left. I should start from here. Yeah, do you understand? Yeah.
Okay.
Okay. So you should start from here. So we see the price is moving up, uptrend, 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 uptrend. Okay, and then we see the price start consolidating here. Okay, okay, continue. Yeah. From the left.
Okay.
From the shaded area.
An uptrend.
Okay.
And then.
Okay, before you go on, let me point out to you again. What is this movement? What is this movement?
Downtrend.
This is not downtrend. This is what you can see that the movement is very, very similar to what?
Stop hunting.
Consolidation, right?
Okay.
Stop hunting, right? Now, when we say the market is accumulations, now not exactly the market must be in horizontal movement. It can accumulate in such a way. This is also considered accumulation. Why? Because for every move down, you can see that the sell side liquidity are being attacked. Can you see that? The sell side liquidity are being attacked. See, every move down, it make a low here. It pull back, make a high. The next move down, it make a lower low to take out this stop loss. It pull back again, next lower down, take out the liquidity again. Go up, move down, stop hunting again. Move up, move down, stop hunting again. So this whole thing is actually a what? Accumulations, right? It's very similar to when we say about, oh, market is like over here, accumulations. You see, the sell side liquidity are being attacked. So eventually price goes up. So over here, we also see that the sell side liquidity are being attacked. The buy side liquidity are respected. And eventually you see what happened to the price? It go higher. Can you see now?
Yeah. So how
Okay.
do you differentiate between accumulation and a downtrend? Because if it's like in the short term and
Okay, a downtrend will be more like example. Let me get this. Okay, a downtrend will be as I said, we're in an uptrend.
Mhm.
Now a downtrend will be look something like like a very nice stair step, not stop hunting, a stair step,
Okay.
very nice stair step. But this is clearly a stop hunting, right? Now where the price stop hunting to where? The price, not only the market is doing stop hunting, the market is trying to do what? Let me see anything here. Now you look at this move up from here, this move up to here, A to B. You see, where is a trap order? Here to here. Can you see?
Yeah.
Okay. So that is a trap order. So if we draw this trap order and extend all the way to the right, you see what happened? The price was doing accumulations, was taking out all the sell side liquidity, right? So that the bank can move up the price without this buyer being the obstacle in the future. They get rid of all these buyer, right? At the same time, the bank is trying to unlock this trap order. So they are actually two birds with one stone with these accumulations. They are sweeping the early buyer so that when they in the future, when they start to move the price up, they do not have to absorb all the sell order. That's one objective. The other objective, you can see the price is moving down to unlock this trap order and move up.
Okay.
Okay.
Yeah.
Yeah. Okay, continue. So after accumulations, we are in the trending market, right? We are in a trending market, and then continue again. I just want to remind you, in a higher time frame, this is actually a consolidation phase, right?
Yeah.
But in a smaller time frame, you see the market uptrend, you see the market downtrend. But in a bigger time frame, like daily time frame, this is actually doing consolidations. So most of the time, you can see that in the lower time frame, it is also, you can see a consolidation within a consolidation.
So if this is consolidating, does that mean that I should refer to the higher time frames to get
Okay.
a better idea?
No, we based on a lower time frame to get the idea where the market is going. Let me ask you one question. Have you watched study the diagram of about the Wyckoff, the PDF file about the accumulations and distribution? Have you studied that format, that thing? Have you?
I've seen parts of the video, but I haven't seen like
the slide, the four diagram. Remember, did I show you before the four diagram?
the one before entering the market, or
The distribution schematic 1 and 2, and distribution and accumulation schematic 1 and 2. Total, there are 4 different patterns.
the one in the PowerPoint?
I'm not sure whether PowerPoint. Okay, let me just go there and show you. Give me a second. There is a in the model, there is one Wyckoff. I name it Wyckoff. What is it? Wyckoff methods under complete course. Okay. Let me show you. This one. Richard Wyckoff, can you see? Can you see my screen?
Yeah.
Okay. Now you scroll down. This is a complete PDF. It's a book actually, right? It actually describes the patterns. Now if we scroll down, Wyckoff price cycle, right? You can see that we are in the accumulations, and then go through the markup, go through the distributions, then go through the markdown, the 4 cycle. And then after that, you can see follow up with this schematic, accumulation schematic 1. This how schematic might look like. And then followed by schematic 2, accumulation as well. See? And then followed by distributions. Okay, distributions, followed by another distributions. So there are 4 patterns that you need to study this, because this basically describe everything about consolidation. Now, if you try to recap what you see on the Australian dollar, we saw the price go up like this, and then we see the price go. Let me have the mouse first. Okay, let me have the control first. Now we see the price have a high buying climax, and then they have an upthrust. This upthrust is to stop hunting on the left here above the buying climax, the swing high. Then we have a final upthrust we call U-tail. This U-tail is actually to stop hunting every stop loss behind the low, and then we start to see the price go down. And this is a trading range, right? I think I talked about this briefly before, right? So if you remember this upthrust followed by U-tail. Now, if we go back to our chart again, let me go back to the chart. Now, if you look at this, try to use your imagination eyes and try to look at this. Let me use the mouse. So this is the buying climax, secondary test, and the price start to move lower, a sign of weakness. And then we see a U-tail. After U-tail, price move lower. We have a last point of supply, right? And make a low here. And now from these distributions, the market immediately turn into a what? Accumulation. Can you see? And then market move up, it turn into a distributions. So what we see here is if we condense this whole entire consolidation activities in the daily time frame, we can see clearly that this is a sideways market. But when we go down to a lower time frame, you can see that we can see many different type of consolidation. It can be a distribution turn into accumulation turn into distribution. All right. So now I'm not sure. Can you see this? If you take a look at this whole thing, entire thing, this is a distribution, and then followed by a accumulations. Can you see this too for the time being?
Yeah.
All right. Now then we move to your right. Okay. After we have see these 2 patterns. Now we move to the right. What do we have on the right? We see another distributions. So in other words, this is a distribution. This is accumulations. And we see a bigger distribution on the left.
Yeah.
So there are 3 patterns inside here. Can you see now? Okay. Yeah. So now we see there is a distributions. So it means that we can see that the buy side liquidity has been attacked constantly. And this is again, you can see that this is a buying climax followed by secondary test, secondary test, secondary test, and then we see a U-turn. Now last point of support, last point of support, last point of support. Now, and here we do not know whether the market is going to transform into another accumulation and go up further, or the market is going to break and then continue to go down. We have no idea. We need to see, go to the lower time frame and see where the market is going. Can you follow? So if we go take a look at the 4-hour time frame, let's see whether what kind of pattern we see. Okay, we have a distribution here. See, in the 4-hour time frame, we see this as a distribution, and then followed by accumulations. Okay, and then the whole entire thing like this is a distributions followed by accumulations followed by distributions. Okay, so you must able to train your eyes to spot this kind of patterns. Yeah.
Okay.
Okay, now continue from the 1-hour time frame. Where do you think the market is going? You are looking to buy or sell now? We are looking to buy, right? Correct?
Yeah.
Just now based on the higher time frame, like 1 hour, 1 day, we say the trend is up, right? We have a break of structure, which is over here. And we have the origin, the break of structure is here. And this is the range. And we will look at the price right now. The price is on the higher side, right? If I want to buy, I want to buy something that is at least below 50%. So it should be something around here, at least. Some around there, 50%. Don't have to be precise. Around there, 50%. So I only want to buy if the price comes down to this area. Are you okay so far?
Yeah.
So now also I have located that this is my demand and this is also my trap order. So I'm going to identify this is my trap order in the daily. So what I'm going to do is I'm going to wait for price to come down to this area. Then I want to look for a pattern to go long. In the meantime, whether the price is doing accumulation, distribution, to me is not interested, because my point of interest is not here. My point of interest is below here. All right. So once you are able to identify your point of interest, so long as the price don't come to my point of interest, I don't care. I'm not interested. Okay.
Yeah.
Unless you go down to a lower time frame. Let's say if I go down to 1 hour time frame, well, in a 1 hour time frame, I know that I'm in the accumulations here, right? And let me see. Over here, it's difficult to trade. Very difficult to trade, because you can see that a lot of stop hunting. If we, let's say I want to buy some, let's say example, I say, okay, I want to buy here. The problem, if I buy here, because it is in the consolidation, price might just go below and then go up and stop me out first before go up. So during when the price is doing this kind of consolidations, because of the potential stop hunting, it is very, very difficult to trade, because the chances of getting stop hunting is very high. So usually I will not want to get involved in this area. I want to let the price come to me and not I go to the price. I define where I want to do business. Where I want to do business is over here. So as long as the price don't come to my area, then I wait. I don't mind waiting.
Okay.
Okay. Yeah. So that is the analysis on this pair. Anything you want to add? You want to ask? Huh? Is there anything you want to ask?
Consolidation, and it's on the lowest time frame, like 1 hour, and it's
Like-
nowhere near your point of interest. You should just wait instead of doing anything.
No. What I'm saying is you just on the point of interest here, you define is based on the daily. Remember, on the daily,
Mhm.
right? That means that, well, then you may say, wow, from the current price to come to this level, it might take long time. But what if I want to get involved right now and not just here? I want to get involved here. Can I get involved here? Of course, you can get involved in this area. In this area, you can get involved in this area. But in order to get involved in this area, that means that you must go down to even lower time frame, like 1 hour, like 30 minutes, like 15 minutes, like 5 minutes, like 3 minutes, like 1 minute, because you are involved in a very small area of operations.
Mhm.
All right. So let's say example, just based on what you have asked, I'm interested to get involved in here. So what can I do? Well, I have to go down to 1 hour. Okay, I go down to 1 hour. So if I want to get involved such a low time frame, maybe right now the 1 hour become my higher time frame. 5 minutes become my trade execution time frame already. All right. So now let's say based on this time frame, forget about 1 hour time frame. Let's say now you do your analysis. Start exactly what you do before. Okay. What is the bias? Is this bullish or is this bearish? Where is the latest spread or structure? Things like that.
Okay. Right now, it looks like the market is consolidating.
Okay. No, because remember, don't think that this is a 1 hour time frame. Do not think this is 1 hour. Okay, let me have a mouse for a while.
As like a 1 month.
Don't think that it's a 1 hour time frame. Take it like this is a 1 month or 1 week, doesn't matter. Remember just now what I teach you. Now, if you look at if you have only so much data point, right? If you have so much data point, what's the first thing you do? Pick your highest high and the lowest low. Exactly. Okay. From here, you can tell already what is a trend based on this data point. Because if you are going to trade in such a small time frame, you don't care about the daily, daily or weekly or money, because that one is too long time, right? You're only interested in the very small time frame, right? So you only focus on this area. Okay. What is the trend? Start exactly what you have done before.
I should focus on the left again.
Yeah.
And it looks like it's in an uptrend.
Okay. Why you say it's uptrend? How you know it's uptrend?
A high or higher high. Then
the one you can see is a sideways actually. It's ranging what? It's ranging, right?
yeah, it is.
It's ranging. So how you know that you have an uptrend or bullish bias? You define where is your most recent break of structure. Where is your most recent break of structure? Exactly. That is your break of structure. Okay. So the break of structure is towards up. That means that this time frame is a bullish bias. Okay. Now, whatever happened, all those trading activities after this high and low belongs to another time frame. You don't care.
Okay.
Okay. So now we go down to a lower time frame, say 15 minutes time frame. Okay.
Okay. So based on the 15 minutes time frame,
What is the market doing? What is the bias?
Range.
What is your bias?
Bullish.
how you define bullish?
Depends on the trend right before the consolidation.
Mm-hmm.
So
So
here it has an uptrend, which
yeah.
means buyers are bullish.
Yeah, we are bullish, correct? Okay, now I tell you what, here you see you draw 3 line here. It's very confusing. Now, when you want to draw the break of structure, you just draw until where the candle break will do. Otherwise, you have 3 line become very confused, right?
Yeah.
So we are in the the price took out the break of structure and move up. So we know that it is a bullish bias, and now we see the price pulling back. We see the price pulling back to where? It pulling back to the trap order before the price. You see this? Yeah, exactly. It pulled back to the origin. You see the price move up. Where is the origin? Where is the origin that break the structure? The origin is here. Now, where is the trap order? Now, these are all the liquidity, sell side liquidity, right? So the bank sell an order, put in the big sell order and push the price lower. Okay, it push the price lower. So we can say that this whole entire thing is a trap order.
Okay.
Okay, so you can now draw your trap order, or you can, in fact, you can even zoom in to be precise. Here, the trap order. Where's the trap? Here, right? This area. Take a look. Where do you think is the area where the bank start to sell? Where?
Around this ERC.
Well, we can take it from here, right? You can see. Let me see. See, this is a swing low. So we can say that, well, the bank start to sell here and push the price lower and do the stop hunting or below here, right? Of course, they start to sell here, but if we want to narrow down, we can always say that, well, the bank start to sell here, and since the bank start to sell here, this is a trap order. See how price hold there, right? Now all the way to the right. See, even though it's consolidate, but it still respect this trap order. Okay, so we know that this is like we are in an uptrend, we are in the bullish bias. So if you are looking for buy, right? And this is a trap order. Okay. Are you there?
Yeah.
Okay, this is a trap order. So when we take a look at here, you can see that the price actually it make a low here, it go up, the price come back. This is a trap order. Price move up, price come down and unlock this trap order. Can you see what I mean? This price move down is to unlock this trap order, but now by itself there's a trap order here. So price move back down, unlock a little bit trap order, price make a high, stop hunting all this. Now price move down to unlock trap order, stop hunting as well. So where the price is going right now, we are here. Can you see right now I'm telling a story? I'm telling a story using the liquidity and stop hunting and trap order to tell you a story. So the latest trap order in the smaller, even the smaller time frame is actually here. Okay, this is a trap order. So now we have a trap order on top of another trap order, and the price make a high, clear all the liquidity, and after they clear all the buy side liquidity, we see the price start moving lower. Now they are attacking the sell side liquidity. Can you see? And now they are attacking the sell side liquidity.
Which means that it's probably accumulation.
Exactly, right? Exactly. They are accumulating, right? They are attacking all the sell side liquidity. And after that, the price move up. Before it move up, now the price come back again to clear all this stop loss over here. Then price move up again. Now, what the market is doing? Well, it is creating liquidity on the buy side. Can you see why I say on the buy side? It's creating a double top. All right. Can you see there's a top here and the top here? They create a double top here.
Yeah.
So when they are creating a double top, they are giving the trader to see this pattern. So the more the trader see this pattern, the more the trader will put their sell order here, their buy stop, their stop loss above. Sell order here, stop loss above. Now, why the bank are creating this buy side liquidity? After the stop hunting over here, why are they creating the buy side liquidity? Do you understand what I mean by they are creating buy side liquidity?
Is it to push the price up easier?
Yes, that's one thing. Well, no, what my question is, do you understand when what I meant when I say the bank are creating the buy side liquidity?
Kind of.
Okay. The what I meant is they are creating all these multiples, double top, triple top, so that they attract, they give the false impressions to the trader, thinking that this is a very strong resistance. So a lot of traders start to put in their sell order here and expect the price to come back up and take their order and go down again, right? So the bank are creating these false impressions to the retail trader. Why they want to do that? Because this is exactly what they want the retail trader to come in to put their sell order here and put their stop loss above. So this stop loss is liquidity, right? I said that before, right? So they are creating liquidity on the buy side. Now, why they want to create liquidity on the buy side? Because in the future, when they want to move the price up, this buy order, the stop loss, because when the traders sell here, their stop loss is actually a buy order. This buy order will help them to push the price up even faster. That's exactly what you say just now. Okay. So when we look at a trade, right? When we look at the trade right in the current price right now, we can see that the bank are creating buy side liquidity so that they can in the future when they want to move the price up, it will become very easy. So by looking at these patterns and the trap, this is what I call trap set by the bank. Now, by understanding the stop hunting on the sell side liquidity, the accumulations, the creating the buy side liquidities, the gap that need to be filled, the buyers right now is up or down. The buyers is up or down.
Down.
Huh? Where do you think the bank want to move the price to?
Banks wants to move the price up.
Up, exactly. And we want to trade alongside with the bank, right? Am I right? Correct or not?
Yeah.
We want to trade alongside with the bank. So if the bank want to move the price up, we also want to buy. So now it is our job right now to look for where do I want to get involved. You understand?
Yeah.
Okay. So now you look at this area, this movement up, right? This movement up, where is the break, the reason break of structure? Well, the reason break of structure is here. Where is the range? This is the high. Where is the origin that break the structure? This is the origin. Okay, so far?
Yeah.
Okay. So now, if I want to get involved, once I have the range, once I define my range, which is here, the high and the low, I know that if I want to get involved to buy this, I want to get at least buy 50% and below. So it's about that line, right? So that means that anything below, above this green line, I'm not interested to buy. But below, yes, I'm interested to buy. That's what I meant. Okay, follow?
Yeah.
Okay, so the last thing I want to look for is where is the trap order? Where is the origin, the trap order? Well, I can see that there are stop loss below, stop loss below, stop loss below. So the bank start pushing the price lower to stop hunting all this. The initial start here, they push the price lower. So I can say that, well, the trap order inclusive of all this. And now the price is coming into this area, I'm interested to get involved. So now once the price go down into this level, what I'm going to do is I'm going to down to even lower time frame, say 5 minutes time frame. Okay. Now in this 5 minutes time frame, I know that I want to get involved is this box here. Okay. So now, when the price eventually enter this box, what do we expect to see before you pull the trigger to go buy? What do you want to see?
One of the chart patterns.
What pattern? Can you take over and draw?
Okay.
So draw the imagination line, the price action inside the zone. What do you like to see before you go buy in a smaller time frame, like 5 minutes time frame? So there are two things I want to see before I go long, right? So I will go down to a lower time frame. The first pattern I want to see is I want to see the price come down, 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 and give me another accumulation in a lower time frame, and then price jump, right? Once the price jump, I will look to buy here. Okay, so I'm looking for another accumulation, or I'll be looking for another different pattern, which is what? Down, up, down, up, down, up, right? Where the market actually break the structure, right? From a downtrend, when we see the market break the structure to the upside, like this, right? The market make a high higher than this, the previous lower high. Is that break a structure?
Yeah.
Okay. So if this is a break a structure, it means that this downtrend down likely to turn into an uptrend because there's a break of structure. All right. So I'm waiting for this break of structure, and once the price come back, my buy limit will be here on this break of structure high. My stop loss will be below here. Stop loss. You got it?
Yeah.
That's it. That's what these are the two patterns I'm looking. I'll be looking to end for before I pull the trigger to enter long. Okay.
Okay.
Do you understand?
Yeah.
Okay.